Hey there, friends and family. This is Vince Casey, your friend in real estate. I just wanted to come on and give you a brief synopsis of the market this morning. It does look like market activity is beginning to increase from the buying side. It looks like we had 111 houses go active last week and 136 go pending. So that's not quite driving us into that intense seller's market that we're in, but that's still really good, really healthy activity. We are still seeing homes stay on the market a little bit longer than usual. I see a lot of opportunities out there for buyers that were tired of overpaying or getting outbid by cash every single time. So if you are in the market for a house, fall usually is a pretty good time to keep shopping. There are the family buyers that kind of pull out. They don't want to move their kids during the middle of their school season, start a new school program, right in the middle of the fall. So a lot of times those buyers are a little bit more passive. The downside about looking for homes in the fall is there usually aren't quite as many homes on the market during the fall. People tend to like to list their homes in the spring. Their homes are green and gorgeous and their rhododendrons are popping and they just feel like it presents much better. Speaking to that, if you are considering selling, sometimes fall can be a fairly good time to go on the market. So there's that to consider. You might have a little less competition. Your home might stick out a little bit more than it would in the springtime where everybody is listing. Speaking a little bit more to APR rates, they are slowly increasing. So I'm not sure if that's a trend that's going to continue, but we're just looking at the very tip of 6% right now. That's really healthy that everybody's continuing to buy, but if it gets a whole lot higher than 6, usually is whenever buyers will start to pull away and wait for a cheaper APR rate. So just keep a lookout on that. My normal spiel is kind of pretty generic, especially this time of year. I feel like I could say the same thing every week. So I might slip into a little bit more of an investor update as well. A lot of people are looking at getting their first rentals. Now they have some value accrued in their home. They want to take out a loan against their home to buy another property that they can rent out. Here in Eugene, Oregon, it's pretty hard to find a property that's gonna viably give you cash every month. Usually the competitiveness of the homes here, you're really just buying a rental home to keep the appreciation value, and your tenant is paying pretty much the value of the mortgage. There might be $100 or $200 variant, but a lot of times that money goes back into maintaining the home. So if you are considering looking into an investment property, just be prepared for that. You could strike gold and find a property that has a cap rate that's pretty advantageous, but finding something over 5 is pretty difficult in Eugene, and if you do, you're probably going to be running up against multiple offers. So if that's been running in the back of your mind, just keep that train of thought that, hey, I'm getting this property to gather the appreciation value and not necessarily to have like a surplus of cash. Of course, that might be a different story if you're going Airbnb or VRBO. Those are usually more lucrative deals if you're comfortable stepping into that market. On the flip side, if you're into remodeling homes or considering flipping your first home, generally the market doesn't really pencil for homes that are just going to be bought and flipped, especially if you're using private money. Just keep in mind, private money is going to be a much higher APR rate. You're looking more like 11 to 12 APR. So your holding costs are going to be a lot higher than if you just had cash to buy a home. And if you do have cash, kudos to you. That does get rid of a lot of the holding costs. But generally the homes that go on the market for flips, they'll get kind of outbid to a point where if it does pencil, you're only going to make about 10 to 15K off the profit of the home. Now, that might sound like a large number to some of you, but after you've put 6 or 10 months into a home, that number might be a little bit disappointing. And then if you lose money on it, With inflation, all the material costs are going way higher. Used to, if a home was worth about 500 all fixed up and you bought it at 400, you had a nice little cushion and you were going to make probably 25 to 30K. Now, inflation kind of took most of that chunk away from us. That same deal now, you're probably going to want a larger margin than 100K, and those homes are just hardly ever on the market. When they do come on the market, there's a lot of people bidding them up, and you can end up kind of back where you started, to where you're just going to flatline on the property, or maybe make 10K or something. So the best line of or best target that I would recommend is if you can do a hold and flip, which would mean maybe get a property, rent it, get the appreciation from the home for a couple of years and then flip it. Or if you wanted to live in the home that you were going to flip, of course, those pencil quite a bit better. So it depends where you're at in your portfolio, what you're trying to do, what you're trying to create. But I work with several investors, and I've definitely dipped my toes in those waters a few times. So if you have any questions, feel free to reach out. I'd love to help you out. Hope everybody's doing well, enjoying these last days of sunshine, and having a great day. All right, take care.